Good morning once again. We appreciate listening to the Haven Financial Group show. Feel free to give us a call, 612-504-8400. Visit us online at havenfinancialgroup.com. We got a very interactive website. All of our classes are online. You can see when the dates are, where they're going to be. Love to have you. There's never any cost. No cost to come in for consultations or a visit. Maybe it's been years since you've had a second opinion. If you're listening and you don't know if you have a plan, or if you do have a plan, but you don't know if it's the right plan, in any of these retirement areas, we can be a resource, and it simply starts with a conversation. Talking a lot about taxes today because it's real. It affects us. But we do all the different retirement puzzle pieces. Do you have all the pieces, and did they go to the same retirement puzzle? Let's talk about the big, beautiful bill. How about that, Lance?
It was a great piece of legislation that was passed, and I saw a lot of seniors taking advantage of one of the big provisions of the extra $6,000 per individual for anyone over age 65 during tax season. A lot of people were saving somewhere around $1,400 to $1,500 on their federal tax bill due to the big, beautiful bill this year.
Well, Lance, we originally thought that we were going to fall off that tax cliff this year. And that we talked about that a little bit and made reference to it earlier in the show, the idea that tax brackets had been set by the Trump administration actually the first time, and they were set to sunset this year, and then they stayed in place thanks to this bill, correct?
Yeah, so the Tax Cuts and Jobs Act that was passed during Trump's first term, those were set to expire at the end of 2025. Then July 4th, 2025, Congress and he were able to sign the big, beautiful bill, which then extended a lot of what was passed in the Tax Cuts and Jobs Act. So the tax brackets that we got used to for the past 8 years of 10, 12, 22, 24, those have now been made permanent. And again, permanent meaning until Congress decides to change them on us again. Mm-hmm. It also changed the estate tax exemption. So when we look at the estate tax exemption for people who pass away or for gifting purposes, we were getting close to 13, 14 million. But when we're going to expire, it's going to drop back down to 7.5 million. Well, now with the big, beautiful bill, it is continued going forward at 15 million per person. So for a married couple, we're looking at about $30 million that they can gift to people or pass away without paying any federal estate taxes. Mm-hmm. And again, just want to point out, this is all on the federal level. For those of us living here in Minnesota, we still have a 3 million estate exemption there. So if you are going to pass away and you are worth more than $3 million, well, you may not have anything to deal with the feds, but you're still going to have to do something with Minnesota.
Yeah, absolutely. Okay. And I'm glad you made that clarification. And if people are listening to us and maybe they live somewhere else, that's the case across the country. So if you're planning to move, you'd want to look into what those taxes might be. Has it changed for kids? I know that the president had a special kids account. Let's talk a little bit about that.
Yeah, it was actually kind of fun. I still remember watching the Super Bowl and they had the ad for this that they're calling the Trump accounts. And so for kids born this year and last year, the parents can set up a new savings account that they call the Trump accounts that the government will fund for $1,000. Mm-hmm. Now, just because mom and dad have to open it up, it is not just limited to mom and dad making contributions. The entire family can still make contributions. We had a client just email a couple of weeks ago saying, hey, what can we do about this one? Can we open it up? Who has to do this? Can we make the contributions? And we were more than happy to respond back that nope, the parents are the ones that are supposed to be creating this one because the kids are their dependents. But as grandparents, you can definitely make the contributions to those.
Absolutely. And are those, I'm sorry, help me again here. What's the tax advantage to those? Oop, those are the allergies, all that stuff floating in the air. Goodness gracious. Again, the tax situation for those?
So what's supposed to happen with these Trump accounts is that they are supposed to grow tax free,
Mhm.
and it's supposed to get kids started earlier on retirement.
Okay, fantastic. That's great.
Kim,
I-
Lance previously was
Mhm.
talking about estate taxes, and that which
Yes.
leads me. Carrie Keith and Lexi are estate planning attorney partners with Provision Law. If you're listening and maybe don't have a will, trust, powers of attorney, or those estate planning documents, because you, like many people, have been putting it off for years. And when I say years, maybe 10, 20, 30, or 40 years. Yes, I know, because I ask the questions for many people and they tell me the same thing. Maybe now's the time, because now time is of the essence, because you can't do it when it's too late. Or
Mm.
maybe you have some older wills that were done when the kids were minors and now they're 40 and 50 and they really don't want to go live with Uncle Joe. They're 40 and 50 years old. So maybe they're outdated, or maybe you have trust documents. Come on in and get them reviewed. There's no cost for an initial consultation with any of the three attorneys. Give us a call at the office, 612-504-8400. If you need to get updates, obviously they'll outline the costs associated. But 85% of Americans do not have a competent estate plan, which is only going to benefit, though, the government, taxes, and attorneys.
Mm.
So if you want to make them the beneficiary of your hard-earned estate, whether it's small, medium, or large, no, I'm not just speaking to those that are wealthy. That is also a misconception. Maybe it's time to get that estate plan started, finished, or updated. Again, many people, they have let it go and they've done nothing about it.
Yeah, it's a tough conversation to have, I realize, for a lot of people. But boy, it's an important one, because the last thing I think anybody wants to do is leave their loved ones behind with a big mess on their hands. That's just a terrible situation to be in. Before we finish out here today, we're chatting with Lance Larsen about taxes, and we've been talking about the One Big Beautiful Bill and its benefits, or the changes that we've seen in 2026 as a result, and just coming through tax season. Lance, I know you had your first, real tax season with this bill in place, and you did mention that it was a really good thing for a lot of seniors. Could you again just sort of give us an idea of some of the changes that retirees may have seen when it comes to their taxes as a result of this bill?
So again, when the Big Beautiful Bill was being discussed, everyone heard this no tax on Social Security bit. And unfortunately, with the way they had to pass the bill, they couldn't change the actual tax law. So what they did is they gave all the seniors an extra $6,000 deduction. So it's not necessarily because they had Social Security that you got the deduction.
Mhm.
It could be somebody at 62 who took it early, that they didn't get the $6,000 deduction. We saw this for a 67-year-old who hadn't turned Social Security on, but still received the $6,000 deduction. And so it's just more of a big relief for seniors, for anyone who is 65 or older, that they were able to get that extra $6,000. And like I say before, between a married couple, with both of them getting it, it was $12,000 that was being deducted. They were saving about $1,500 on their federal tax bill.
Fantastic. Great. So as we wrap up today, and there's so much that can be said about taxes, and of course all of this is applicable to people in different ways because their situations are different. Lance, what's the one thing you hope that people will take away from today's show, about taxes and their ability to control taxes?
I hope that people can know that you can plan for taxes. We're not going to be able to completely eliminate and completely pay nothing, and live completely tax free. We still need to have tax revenues to pay for our roads, the police, all the infrastructure that is going on with that the government provides. But we don't need to give them more than we are legally required to.
Hmm.
And so if we can plan and we can take money out in a very tax efficient way possible, well, then we can reduce the amount that we would pay and keep more money for ourselves.
Absolutely. All right. Larry, how about you, sir?
Well, we talked a lot about taxes. We talked about Social Security. We talked about the timing. If you're listening and you want to come in, we'll get you a Social Security report. All these retirement puzzle pieces, other topics that we do at Haven Financial Group, but ones we didn't talk about. I mentioned today estate planning and long-term care and life insurance, Medicare Advantage supplements, health care, tax planning, all of these retirement puzzle pieces. Just about 11 years ago, Haven Financial Group started. We're just about 11-year birthday. Multiple personality. We have multiple personalities in all these retirement areas, wealth management, investments included. There are resources at your fingertips if you're listening. Come on in and visit with us. There's no cost for a discussion. Yes, you're going to get spoiled with cookies and fancy coffee, which is really good, by the way. But I just want you to know retirement is more than a meeting once or twice a year for 45 minutes to an hour to deal with all these topics. If that's all the attention you're getting, you're not getting enough attention. We'd love to hear from you, 612-504-8400. Visit us online or visit us where we're at here today, next week. By the way, we appreciate you listening, and we hope you have a great week. See you next week.